So we've seen high highs and high lows play out on the price vader, following from the previous update where I've been talking about how I've been tracking a correction made up of a WX Y structure, and it looks like it is now within this Y wave, which is also made up of an internal three-wave move. And this Y wave has the potential to reach anywhere between 21 cents to 23 cents. And what you can see is on this move here, we ended up just about falling short of this range. So it's possible that we could have bottomed out and we could see a reversal to the upside, where the next key region would be this one between 27 cents to 30 cents. And what you can see also is within this move here, it looks to be made up of corrective moves rather than an impulsive move. And so in order for the price vader to have been bullish, what we needed was for an impulsive move to have played out. But instead, it looks like we had a corrective move that formed. And so if I was to draw this in within this move here, we had a WX structure that formed where the Y wave got rejected at the 50 MA, and then we saw a reversal. And that was then followed by a corrective move to the upside made up of another WX structure where the Y wave got rejected at the 200 DMA, which is something that took place all the way back here. And so it's possible that we could continue to get rejected at the 200 DMA, and then we see a continuation to the downside where we see deeper moves. And these two three-wave structures could form part of a bigger WXY structure. And so what I'll do is check to see if this internal Y wave is now complete. And so if I was to bring in the fib tool and bring this down to 24 cents, so the Y wave would typically reach anywhere between 1 to 1.236, and that's exactly where we ended up tapping into. And in addition to that, if I drop down to the hourly chart, what you can see is the Y wave looks to be made up of 5 waves. And so we had a wave 1, 2, 3, 4, and 5 that formed this Y wave, and then we saw this reversal where we ended up breaching below the wave 1, which then confirmed that we completed this 5-wave structure. And so to me, I'm satisfied with the completion of this internal 3-wave move to form the Y wave. And so another check that I'll do is check to see if this Y wave also tapped into its typical range between 1 to 1.236. So again, if I was to bring in the fib tool and bring this down to 23.48 cents. And yeah, so you can see that we ended up tapping into that typical range for the Y wave. And so given that we ended up tapping into this range and we also ended up breaching below the wave W, it looks like we ended up completing this correction. And so one of two things could play out, where we could either see this correction form followed by a reversal where we could then tap into this range here, or we could fall short of this range and we could see a continuation to the downside where we could then tap into this range between 21 cents to 23 cents. And so the next key region to be keeping an eye on in the short term will be the 50 to 88.2% retrace level of this whole move to the upside. And so that range sits between 23.59 cents to 24.61 cents. And so if I draw this in, you can see that we've tapped into that range. And so if we manage to find support within this range, it's possible that we could see part of a bigger WX Y structure form to the upside, where this Y wave again would then tap into this range here. However, if we were to exceed this range and go even lower to the point where we breach below the 18.2% retracement level, that would then confirm that we're bearish, and we could then breach below the local bottom, and we could then see a deep move to the downside play out. And if that's the case, that would then mean that we are still within this Y wave, which would then be made up of a deeper correction like so, and we then fall even deeper. And if it just happens that we are ultra bearish and we exceed this range between 17 cents to 20 cents will also be one to be keeping an eye on. And so what I'll do is I'll set out this Y wave target by bringing in the fib tool and bring this to 26.01 cents. So here you can see that ADA has the potential to reach anywhere between around 19 to 20 cents if we are ultra bearish. Now on the 4-hour chart, we are within the oversold region. And so at some point we could see the bulls regain control of the market. And if we go on the 8-hour chart, you can see that the bears still have the momentum. And so we could continue to drop even lower. And on a daily chart, we have seen a reversal on the stochastic RSI. And so we could see the bulls regain control of the market and drive the price of ADA down towards lower lows. And you can also see that it's possible that we could have got rejected at the 20 EMA, which would then signal that we're bearish and we could continue to see lower lows. And so as it stands, it is still up in the air with regards to whether or not we are bullish or bearish. If we find support within this range, we could be slightly bullish in the midterm, and we could see a reversal to the upside where the price of Veda could tap into this range. However, if we exceed this range, that would then confirm that we're bearish and we could continue to see lower lows. And so, yeah, that's something I'm going to be looking at for in the days and weeks to come, and I will keep you guys updated.